In the world of wealth building, two heavyweights often dominate the conversation: real estate and stocks. Each has its own unique benefits, risks, and strategies, leaving investors wondering which avenue is right for their financial goals. In this guide, we'll explore the pros and cons of both options, consider key factors to help you decide, and share expert tips for maximizing your investment potential. The case for real estate. Tangible wealth and passive income. Real estate is a tried and true investment vehicle that offers tangible value, steady income, and potential appreciation over time. Here's why real estate might be the better option for some. Steady cash flow. Rental properties provide regular income, especially in high-demand markets. According to Forbes, cities like Austin, Charlotte, and Nashville are hotbeds for rental income due to population growth and housing demand. Leverage opportunities. Real estate allows investors to use borrowed capital to maximize returns. A 20% down payment gives you control of a 100% asset, amplifying your wealth-building potential. Tax benefits. From depreciation to property tax deductions, real estate investments come with attractive tax incentives. These perks can help reduce your taxable income and increase your net returns. Hedge against inflation. Real estate values and rental incomes tend to rise with inflation, protecting your purchasing power in an uncertain economy. Control and customization. Unlike stocks, real estate allows you to actively improve and increase the value of your investment through renovations or upgrades. Downsides to consider. 1. High initial costs, down payment, closing fees, etc. 2. Time-intensive management for landlords. 3. Market risks, especially in downturns like the 2008 housing crisis. The case for stocks. Flexibility and high growth potential. Stocks, on the other hand, offer unmatched liquidity and diversification. Here's why they might be the right fit for your investment portfolio. Ease of entry. Unlike real estate, you don't need tens of thousands of dollars to get started. Apps like Robinhood and Fidelity allow you to invest with as little as $5. High growth potential. Over the long term, the stock market has delivered average annual returns of around 10%, S&P 500, outperforming many other investment options. Compound growth is a powerful driver of wealth in stocks. Liquidity. Stocks are easy to buy and sell, offering unparalleled access to your money in case of emergencies or changing financial goals. Diversification. You can spread your investments across industries, regions, and asset types, minimizing risk. Passive management options. With ETFs or index funds, you can invest without constantly monitoring the market, making it ideal for busy individuals. Downsides to consider. 1. Greater volatility in the short term. 2. Emotional investing can lead to poor decisions, selling in panic, buying at peaks. 3. Lack of tangible value compared to real estate. Key questions to ask yourself before deciding to determine whether real estate or stocks are a better fit. Consider these factors. 1. Your financial goals. Are you looking for steady cash flow, real estate, or long-term growth, stocks? 2. Risk tolerance. Can you handle market volatility, or do you prefer a tangible, stable asset? 3. Time commitment. Do you have time to manage properties, or would you rather invest passively? 4. Liquidity needs. Do you need quick access to your funds, or can you afford to tie them up in property? Combining the best of both worlds. For many, a diversified approach combining real estate and stocks is the optimal strategy. Real estate provides stability and cash flow, while stocks offer growth and liquidity. For example, 1. Use rental income to invest in index funds, leveraging both passive income and market growth. 2. Reinvest stock dividends into real estate improvements or property down payments. Final thoughts. Tailor your investment to your life. Both real estate and stocks have proven to be effective tools for building wealth, but the best choice depends on your personal goals, risk tolerance, and lifestyle. By understanding the unique benefits and risks of each, you can create a strategy that aligns with your financial dreams. Remember, the key to successful investing isn't timing the market, but time in the market. Whether you're flipping houses in a hot real estate market or growing your portfolio through stocks, consistency and education will drive your success.